Howdy, Jacob here. Today we're looking at Descartes Systems Group in the software industry, 8.4 billion market cap and 8.1 billion enterprise value. They provide cloud-based logistics and supply chain management solutions worldwide. Founded in 1981, headquartered in Waterloo, Canada. Growth for this business is very impressive. 171 million in revenue in 2015 to 573 million in revenue in 2024. Double-digit revenue growth year over year. That's awesome. Increase of gross margin, increase of operating margin. Both those margins are very impressive. 75% gross margin, almost 30% hitting that bottom line. Return on invested capital is the same as return on equity, and it's growing. So that means they have very little debt, and them growing is, everything I'm seeing here is very positive. Let's look and see if there's any R&D spend, and we do see that. So there is about 15 to 20% of revenue being spent on R&D. That is positive. It's taking away money today to hopefully get more in the future or become more efficient. Nothing bad about that. Shares are going up, but the last 3 years have been relatively flat. So not terrible out of that perspective. 321 million cash on hand. No short-term, no long-term debt. Total liabilities less than the cash on hand. So we're very comfortable with this balance sheet. Cash flow statement shows acquisitions being their most heavy form of capital allocation. But again, when companies are very good with acquisitions, becoming more efficient, it's hitting bottom line as well as top line. That can be a very big positive for this business. Their CapEx is still very low at 6 million with just massive productions of free cash flow. So it is interesting that their form of capital allocation is, looks to be like 90% acquisitions in the last 10 years at least. So, I'd be interested to see if the stock got cheap enough, if they would be willing to buy back shares. But as of right now, I'm just going to assume a lot of money being invested is going towards acquisitions. So let's assume a revenue growth of, I guess, 12% a year. Makes sense if a lot of their capital allocation is going towards acquisitions. And they've really done well with acquisitions. Usually I do prefer organic growth, but if I am seeing acquisitions with increased gross, increased operating, increased return on invested capital, all those are positive signs, meaning that the company's doing very well with these acquisitions. And I think that deserves a premium to me. And with margins, free cash flow is so much higher. I absolutely love that. Maybe let's do a little bit of a range at 25 and 30% with a share change of 18 million of stock-based compensation. That's not doing anything. So let's assume relatively flat. And even still, it has to drop 70% before you get the return look for here. Everything about the business is screaming that it's a great business. Return on invested capital, not quite double digit yet, but everything is growing and everything looks awesome. But there's a price you pay for the future cash flow that makes sense to you. And for me, I definitely feel like I am on the conservative end on majority of cases. I think that this business does have a lot of growth. I think it does deserve a premium. But is the premium a 65 or 65.7 price to earnings ratio? I just don't see it being the case. So for me right now, I'm just going to wait. I absolutely want to buy this business, but I will not be overpaying for a good business. I'd rather pay a fair price. So this might be a company that, if it gets possibility of a 10% return over a 7-year period, or maybe if I really do some research, if I'm very confident it can have double-digit growth rate for 10, 20 years even, which is very challenging. But if you do find those businesses, you're willing to pay up for it, because even if there is margin depreciation, or not margin, PE and price to free cash flow depreciation, the growth is still outsubstantiating the discount rate. And it's a very good way to hold on and just sit there and just get a massive return on investment over a long period of time. But for me right now, it does seem a bit frothy. Hope you enjoy the video.